Hey, hi everyone. Welcome to another video in our hedge fund series. So today we are going to discuss about Bill Ackman and his hedge fund called Pershing Square Capital Management. So Bill Ackman is a prominent American hedge fund manager and a investor and philanthropist also. And he is the CEO of Pershing Square Capital Management, which is an hedge fund, and his investment approach is mostly activist strategies and concentrated positions in few companies, and he's willing to engage publicly in the companies he invests in. So activist investing is mainly done by Carl Icahn, where he sees certain companies which could be improved upon, and he takes a major stake in those companies and does activism to basically restructure those companies and make those companies profitable. So this is similar. Bill Ackman also is an activist strategist. The activist strategy is similar. So you basically look for certain companies and you play an activist role in bringing change in those companies. So that's what an activist strategy is. And he also does value investing and concentrated positions he takes in a few companies, and that's what his main strategy is, the hedge fund. Coming to his education, he is a Bachelor of Arts in Social Studies, magna cum laude from Harvard College, and his thesis was titled "Scaling the Ivy Wall: The Jewish and Asian American Experience in Harvard Admissions." Okay, and he has an MBA from Harvard Business School. Okay, so he's a Harvard Business School graduate, and he founded Pershing Square with 54 million in capital in November 2003 in New York City. And his investment strategy is activist investing with a focus on long-term value creation. He takes significant stakes in companies and advocates for strategic changes to unlock shareholder value. The same thing is done by Carl Icahn also. He's also very famous for shaking up the companies where management is shaky, and through activist investing, they bring about a change in the companies. Okay. The notable trade investments he has made are, during the COVID-19, he has uh, did a credit default swaps. So, which invest in 2020, he invested 27 million in credit default swaps, betting against the credit worthiness of the companies amid the pandemic. This yielded him a 2.6 billion profit within a month. So basically, he did a contra trade, and he was able to predict that COVID-19 is going to be very bad, and he made very good money due to that pandemic. He also lost big trades, like Herbalife was one of the trade. So he basically alleged that it was a pyramid scheme, and he took a position of around 1 billion against that particular company, that it would eventually go out of business. And he was very activist. He was in TV channels everywhere, promoting that this is a pyramid scheme. And he even did a lot of promotion, both from a political standpoint as well as a media standpoint. But again, Carl Icahn took a position against him in Herbalife, and he was sitting in the board members also. And yeah, basically, he has to exit that position in loss. And the Valiant Pharmaceuticals also was a loss to him. The company had a good financial background, all the metrics and all the everything basically from business standpoint was looking good, but yeah, there were some cracks in the company which we was not able to identify, and which led to a loss of 4.6 billion in that particular stake. So he's a guy who came into this hedge fund industry, made a lot of name with few good trades in few companies, and then he again went down due to this wrong bets like Herbalife, Valiant, and then came back with the COVID-19 trade. Okay. So it's a hedge fund, Pershing Square Holdings. Management fees is 1.5% per annum, which is less than industry average 2%. Performance fees is also 16% of net profits above high water mark, which is again 4% less than the industry average. He has opened a new fund called a new end fund with no performance fees and 2% management fee waived for the first year. Even the 2% management fee is also waived for the first year. Underperformance. So in 2024, PSH, the Pershing Square capital was written only 10.2%, lagging behind the S&P 500 25% gain. But despite this, he generated substantial fees, estimated to be 200 million in incentive fees and 190 million in base management fees. Public criticism is Ackman's activist approach has attracted criticism, especially when high-profile investments underperform, like the Valiant Pharmaceuticals. Okay, so this is the assets under management which he has. As of 2024, he has 17 billion assets under management. And long-term performance, if you see, 1 year he has generated 5.91% interest and returns. And in a 10 year, he generated around 147.19% returns. And 3 year, 41%, and 5 years, 90% returns. So in 2025, Ackman announced plans to transform Howard Hughes Holdings into a diversified holding company, drawing parallels to Berkshire Hathaway. He's also called, he is compared to, you know, Berkshire Hathaway company, Warren Buffett. He's called the mini Warren Buffett. And yeah, so this is Bill Ackman and from Harvard Business School and Pershing Square Capital. He's this hedge fund. Made some good bets like credit default swaps during COVID 19. Also, some bad bets like Herbalife and Valiant for pharmaceuticals. But overall, he has a very big fund which is performing well, and around $17 billion fund is there, which is performing well and generating around 5 to 6% returns. And yeah, so that's it for today. So thanks everyone for joining the call. Have a nice day.